Hey everyone, hope you're doing well. Today I wanted to try something a little different in terms of these videos. Like I said before, I want to keep giving you guys different opinions and options for investing. So I want to do a top five list basically of tech stocks I think that not necessarily you have to invest in, like I'm telling you what to invest in, but are good investments overall and have a strong a following with them. Now, one of which I'm going to mention, I know several of you are already thinking about, that I mention a lot, is Facebook. Now, overall, Facebook has a monopoly on the social network. It is the largest company of all the social network companies to trade. They have close to 2 billion users. They monetize all their pages. They have Instagram, which has close to 1 billion users. They have WhatsApp, which has over 1 billion users. You know, they have various outlets for income, and most of which, like I said, are all monetized and they make money. Now, with Facebook, you're going to want to think of this stock as potentially the just that social network aspect. You're not thinking of it in terms of, cell phones. You're not thinking of it in terms of computer technology. You're thinking of it mostly on networking because that's where it gets the bulk of its revenue. Now, it does spend, I believe, last time I checked, around 30 to 40%, I want to say, of every dollar made towards R&D, so research and development, which is good. Most companies don't spend as much, so they definitely invest heavily in other options and other avenues of growth and wealth. But overall, this is a social network company, so that is where the bulk of your revenue is going to be. So when you look at competition for Facebook, you're going to think Snapchat, you're going to think Twitter, and probably some other smaller companies that I can't think of off the top of my head. But if you look at Snapchat, they just had their IPO recently. It's got people interested. I personally rather go with, the elephant in the room, which is Facebook, because it's just such a big company. They have a $400 billion market cap. You can see on these earnings, they consistently beat on earnings every time. A lot of what they do is based on their monetization. That's where they get the bulk of their revenue. Now, in the future, obviously, if something happens to this company, there's a big scandal or whatever, it'll drive it down. But I would advise people to use it as an opportunity to get in. So, for instance, if we look on this 1 year chart, there was some dips along in here. And if I remember right, there was speculation because on the conference call, they kind of downplayed their next year's earnings, which kind of caused investors to want to get out of the stock. Now, I bought into the stock in my IRA, not on the trading. I'm looking to trade it, but I'm waiting for it to come down. Right now, it's at an all-time high, and I don't like buying stocks at all-time highs. I want to buy them when they're cheap. So I'm waiting for that next opportunity to get the stock. And another one that's also very popular and good at monetization is Google. If you don't know Google, or in this case Alphabet, definitely the largest company when it comes to being a good search engine. You have Bing and other options, but Google by far holds the crown for most searches, most options, most links, all that. Also, Google has YouTube, which is another big revenue maker on their board. But when you look at the terms of revenue for this company, you're going to look at same thing with Facebook as far as the monetization of the ads, but they're going to heavily be based on what YouTube brings in by content creators, as well as the ads that they put on their searches. So whenever you click a link, you go to a website, you'll see an ad. Google's getting paid by somebody to put that ad there. So that's a lot of where their revenue comes in. Now, Google does do a lot with the driverless car technology. There's other avenues of wealth, but those three, though, the search, the YouTube, and the Google cars, are kind of like the big ones that everyone talks about. And obviously, the driverless cars isn't something that's has been licensed. It's not something that's in circulation. You know, it just keeps building and building and building till one day they will have the rights to do that, and they will be on the road, and people will be buying them because a lot of people want it. Now, if you're looking at this stock for a long-term view, same thing. Whenever you see kind of these dips in the market, you're going to want to go after this stock. You know, there might be people saying, oh, Google can't do this, Google can't do that, so on and so forth. And you see here that they're a $500 billion market cap, so these are like mega cap companies, but they also offer good growth potential. They grow very quickly, so you got to kind of buy and hold. You know, you got to find those right opportunities. With this stock, I own it on my Loyal 3 app, but I buy the fractional shares, so I buy it at a much cheaper price, but I don't own full shares, but the fractional shares still trade like the normal stock. Now, another big one that I touched on the other day is Microsoft. Microsoft, again, another huge company. They also have a $500 billion market cap. A lot of what Microsoft does is kind of like being a landlord. You know, they collect rent, they collect royalties. People that use their software to further, you know, games, applications, networks, programming software, Office suite software, many other things that they use Microsoft Office's platform on. So a lot of what they do when they get services, they'll buy up companies and they'll brand it with their name, and then they'll just collect the royalties off that service. So anytime you have someone using Microsoft Outlook, anytime you have them use Microsoft software, search engines, Explorers, Windows software, so many different things that people continuously buy and use on a regular basis that Microsoft just keeps making money on. And they too do well to beat on earnings. You know, they make several $billion a year consistently. A company like this, you know, same thing. You're going to look for those dip opportunities. You want to buy and hold for the long run. All these companies I'm going to mention are going to be the buy and hold opportunities. But you want to remember though, when you buy into these stocks, you want to always have that long-term outlook. I don't think there's many people that are going to want to day trade Google because, you know, it's $800 a share. It's really expensive. You know, that's unless you're a very wealthy investor, then by all means. But you know, you're going to look for those proper those proper moments when it's good to buy that stock. So that's just another good option for you guys. Another one that I also own is Amazon. Now, Amazon recently has some very good news, and it's been driving up the stock. And I was lucky able to buy it up in this dip area before it started running up, so I made some profit on it. But Amazon is continuously causing chain stores to close down. I think recently Sears was one of the major stores that's already starting to close down businesses. And you know, you have a lot of department stores kind of saying the same thing. You know, they're losing the battle to online realtors like Amazon. It's hard to compete when we live in a society where everybody's on their phone, you know, 24/7. You know, that phone's always in their face. You could shop from it. You can go on social network. You can do searches. You can pretty much do everything with the stocks I just listed. You know, the opportunities are endless, but when you can buy and sell, or you can buy something and it arrives in your house within 2 days, you know, it's almost an addiction to the point where like people go to Starbucks, you know, they have to have that coffee in their system, and it's just an addiction. You keep doing it and doing it and doing it. Same thing with Amazon. Like once people start using it, they like the service, they like how quickly their packages come, they like the good offers, they like deals, they like that they see multiple reviews on it. You know, all that aspect of in a sense its own social network, because you could read up on people's reviews, check out pictures of the product, see what people are saying, make comments on the own purchases that you made. Almost like a built-in Yelp kind of service with it. And that just makes the whole experience overall better. Now, of course, same thing. You're gonna want to buy these on dips. You're not gonna want to chase a $900 stock. You know, that's gonna kill your wallet pretty quick. Again, with my Loyal 3, I bought into this, and you know, I buy fractional shares, so it's a lot cheaper. And you guys, of course, can use Loyal 3 as well. You just can't use the app. I guess they took it down for whatever reason, but you can still go online and use the service and trade that way, which I would recommend because it'll save you a lot of money in the long run, and the stock will still trade the same. But Amazon, they want to spread out their web. They want to be in other countries. They want to compete. Obviously, Alibaba is the name that would come up as competition. China's basically version of Amazon. And if you look at statistics, like China has over 1 billion people. America has, like over 300 million. So if Alibaba catches steam and really gets going, and people are really using it, and as long as it stays consistent and it can make good numbers, it could definitely be a big competitor against Amazon. But outside of that, there's no other real competition for Amazon. It sits at the top by itself. There's nobody that could really compete against it. You could argue Walmart with their Jet.com service, but still there's no competition for Amazon. It's too simple, it's too easy, it's efficient. You even got one-click buying, which a lot of people won't like the fact that they use that, but they like the fact that it's there. They like the ability to see something they want and instantly have it. That instant gratification that people get from these kind of services. So kind of think of it like that. And the last one here, I would say, is one a little outside the ones I just showed you, is Nvidia. Now, Nvidia recently had a really good run up. If you could see on this chart, it started down here at $26 and then just ran way up to $100, like in 1 year span, which is ridiculous. But Nvidia is great at making chips for computers, especially like graphics chips. And you think about how important graphics chips are, being in computers, being in game consoles, being in phones, being in everything that is basically a TV screen, an LCD screen, a projector screen, anything like that those chips can be put into to make a better viewing experience overall, is going to be something that people really, really want. Now, there are other good competitors in the chip space that can kind of rival this company, but some of the top brands will always refer back, at least that I've noticed, will always refer back to using Nvidia in their products because they just are so good at making those graphics chips. And the gaming community is huge. Like I'm not a day gamer or anything like that by any means, but I grew up playing games, and I remember seeing everything from like 8-bit Nintendo graphics all the way to the insanely high graphic resolutions of today, and that's only going to continue, especially going into like virtual reality and other aspects like that. It's only going to continue to grow and add to the experience. Again, there are other chip companies you can go into, but when it comes to graphic chips, Nvidia usually is the standout among those crowds. So this is another good option to get into. Now, I haven't seen much cool off from this stock yet. I do see it going in kind of a flat pattern right here, but I don't know where it's going to continue to go from here. I admit I wanted to wait for it to come down maybe to about a $90 level before I get into it. That way I can catch a ride up, because the PE is still about 40, you see right here, so it's still kind of high for me. I've said in other videos I like to trade a PE around 15 or 20. So if it comes down a little bit, I would be buying into it. But in the meantime, those are just kind of like 5 tech type stocks that are, very popular, have a very solid niche that they're in. They don't have much competition that could surpass them, but they are still competitive in their space. Now, this is just one example of a sector. Obviously, there's other sectors. And if you guys like these videos, I'll try to make some more, just give you guys good ideas. And then as always, don't take these 5 and then just go out and buy them. Don't just automatically believe what I'm telling you. Do your own research as always. Follow up on other content, on other people like kind of giving their tech tips. I guarantee you will see these names pop up in multiple outlets, but always go that extra mile, do your due diligence, and find out for yourself if these are really worth it. But these are definitely companies, in my opinion, that are going to be around a long time, and they're not going away anytime soon. I could tell you, living in the Bay Area, that Nvidia has a new building being built. I don't think it's finished quite yet, but it's a fucking huge building. I've seen it several times. They're growing their business. They're they're trying to make multiple locations and buildings. You know, they're trying to increase their overall production. So it's definitely a growing business. You see the market cap only at 50 billion, which the other ones were like some mega cap stocks. So this is definitely a good growth company as well. But hopefully those ideas will kind of get you all thinking about tech companies. I mean, tech in the future is only going to continue to grow. Period. Like there's no tech's not going anywhere. It's only going up. And it's still these are still new companies. These are still baby companies. You know, like early 2000s. Some of them go back to, but still, that's like less than 2 decades. You know, it's not that old compared to like Ford or some other big companies that have been around for so long, but yet some of these tech companies have market caps much larger than them because they grow so fast and they're utilitarian in many ways. But if you all have any questions on that, feel free to follow up on this video. Leave me a question. I'll try my best to answer it. And as always, if you like this content or if you want to see more, maybe like top 5 videos or something like that, I'll try to add them. And then just click like, subscribe, help me out, and I'll keep this channel going. Enjoy the rest of your day.